Brent crude futures LCOC1 were down 46 cents a barrel at $61.41 by 14:51 GMT. U.S. light crude CLC1 fell 36 cents to $54.97. Oil prices have slipped in recent days from the two-year highs hit last week by both crude benchmarks after signs that U.S. supply is rising fast and could potentially undermine OPEC's efforts to tighten the market. The oil market sell-off is easing, but the bearish afterglow from yesterday's update on U.S. oil stockpiles is keeping bears in the driving seat, PBM wrote in a note to clients, referring to new data from the U.S. Energy Information Administration on Wednesday. Selling pressures are being underpinned by an unexpected jump in U.S. crude and gasoline inventories, PBM added. The EIA data showed domestic crude inventories C-STK-T-EIA rising for a second week in a row, building by 1.9 million barrels in the week to November 10 to 459 million barrels. Analysts in a Reuters poll had expected a decrease of 2.2 million barrels. U.S. crude oil production C-STK-T-EIA has hit a record of 9.65 million bpd, meaning output has risen by almost 15% since its mid-2016 low. But expectations that a meeting of the Organization of the Petroleum Exporting Countries in Vienna on November 30 would result in OPEC nations and other big exporters extending their pact to tighten supply has offset some of the pressure on prices. OPEC and non-OPEC exporters including Russia agreed a year ago to cut crude output by 1.8 million barrels per day, BPD, between January this year and March 2018 to bolster prices.